Representing TheoTrade, this is Corey Rosenblum, and you're watching the Theo Nightly video for the 26th of May, 2020. And we're kind of back where we started and finished last week, which is, we'll see on the S&P in a minute here, but to the upper edge of the weekly expected move. It's a little bit off the chart on the SPY. We'll come back to it in a minute. Above the value area extreme profile, which is the yellow line, and above the prior high. So what we're mainly looking at, the same thing we were, nothing's really changed just yet, except we're leaning a little bit at the edge of that move and leaning a little bit too bullish for most of our comfort. But we can't make the market do what we want it to do. All we can do is assess the probabilities and go from there. I'll give you a hint. The last 30 minutes, or the last really 15 minutes of the session today made a difference in the tone of this video. If this would have closed at the high, I'd be saying, throw your hands in the air, let your bullish hedges take over, get long, we're going to break to the upside and everything else under the sun. Well, that last 30 minutes puts my tone a little bit more optimistic, hopeful. We'll see what happens, of course, this week. But nonetheless, the end of the session with this high bear volume might make this a little bull trap. Traps the longs, traps the bulls, yanks the market back lower. And those who are patiently holding on and didn't bail today with short positions, that may change on Wednesday, Thursday, but again, we're here on Tuesday night, will be validated with a pullback, retracement, and a little bit of a return to normalcy. In the SPY, I'm assuming, if you're like myself, you're already positioned at the edge of the expected move from last week. Right? The expected move is up here. We can take a look at that quickly on our expected week chart. And see, right, we had a little push to the edge of the expected move. We actually closed at it. It's a little bit different right here. And the weekly expected move this week, as I promised, is, roughly speaking, at that 3030 or 3033 level. That's about today's session high. So again, like it, love it, hate it, we're roughly having the same conversation. We can pull that back to the SPY as we did last week. Essentially skirting the edge of the expected move, waiting, hoping, positioning for a sell swing just to get some in-out spreads or some a little bit more distant vertical spreads in the money. Certainly not the case in today's session, but again, just the beginning of the week. So same commentary holds, same trades hold, same type of probability holds. That the market still has a dominant thesis pullback approach that is from the expected move type of charts, these value area extremes being beyond them. Remember, markets can go a little bit beneath. It's, again, not trying to predict the future here, but potentially not dissimilar to when the market hit the edge of this and skirted down underneath. It really was about 2840, 2835. Might get some bull type of positions here, and then bang! The market goes and makes a new low under 2800. And then the patience paid because we rotated back inside into the edge of the profile. And of course, the weekly expected move. That was not the case last week. The main question now, the ultimate question on my mind and the positions for you as well, is this right here going to take place again? Is this bear trap? Let's get all bared up right here and then yank the mat underneath the market, surge to the upside. Is this going to be the top right here? Yank the mat away from the bears and then crush the market lower. We certainly do not know the outcome. But if you are positioned bearishly, today was a little headache, a little bumpy ride, but not anything to panic about just yet. Let's talk about panic. Remember, trading is a probability game. It's not prediction or certainty. So we have to have those bullish hedges or have to have different plays. In the rarer event, 20-25% of the time, things still can happen, that the market just turns and goes straight to the upside. And that would be, at least on the S&P futures, here, 3030, on the SPX itself, same. And don't forget, we're just a little bit under that, well, closed at the 200-day simple moving average. So this is the make or break point for the market. It is either going to trade down, I don't mean to the low, I mean just rotate back into a chop zone. We might see that better with a 4-hour chart, maybe even an hourly chart, which is this right here. Just rotate back down, trade back down. Nothing spectacular, nothing magnificent. Just trade a little bit lower. And that's going to provide profit and profitability for those spreads or any type of negative delta positioning or long volatility positioning for that matter. If that doesn't happen, then we have an upside breakout. We are threatening it today, but again, the difference in how the tone of this video went was the last hour. And the last 30 minutes really was a demonstrable sell-off. And we see that here in the S&P futures. Don's gravity point of 2893 was in play. It certainly didn't feel like it on the opening session, but nonetheless, the market did close and rally actually off of gravity. The thing to be noticing or watching closely is the Nasdaq. The main driver of today's market was the financials, XLF, our financial index, and the weakest sector actually wasn't technology, it was healthcare. But technology is a lead driver. And you can see some of the names here. We'll actually go back inside the S&P 100 to see our weakest names included NVIDIA, little bear flags in the intraday chart, Netflix coming down off the highs, Biogen, which had a significant sell-off into the close, PayPal is a technology, is a financial, it's a whole other conversation, Adobe, and Amgen and some others, including Microsoft. They closed very weak today. Now, the other way is the financial. So the other side of the coin are these trend days in financials. So that's the main idea. Financials were strong. That's what helped boost the market higher, or at least boost the S&P higher, and the Dow. And of course, the small cap Russell. The Russell's a little bit more tied to the financial index anyway. And that's just where we ended the session. So Nasdaq traders had a more difficult time than S&P or Dow traders or anybody going long financials pretty much wrote their checks in today's session. Won't always be this easy. So again, however you're positioned, no need to shift at the moment. No need to shift at the moment, but that will take place in the event the market does close break on high bull volume. That didn't really happen today. Or a holiday session on Monday and the little pre-holiday on Friday. This week is going to be the determinant whether we take a loss or significant losses, depending on how you're positioned, into the spreads. But that's what's beautiful about spreads. And you're not going to lose as much money as if you were directly short the market and hanging out overnight. Spreads will limit your losses, but they will also cap your gains. So that's where we sort of are in that perspective. But be careful, be safe in the event these names do break higher. So we'll finish by looking at some other perspectives. Again, financial strongest sector and the weakest technology. And that's mainly what we're going to be seeing. Healthcare actually is doing what the profile should be doing, which is trading down away from the upper, up away from the lower, down away from the upper, and then of course up away from the lower. And today just sort of jumped into the top of the profile, and that happened overnight. And up from here down to the low. That's what should be happening. Certainly cannot guarantee that. And if the market does break higher, we'll either balance out with intraday positions long bullishly, ideally on leading stocks. It could be financial sector stocks. Or we would either roll some of the spreads, or again, we mentioned Tuesday, Thursday's video, having some bull positions on, not so much looking for appreciation of the upside or bullish type of plays, but what if the market actually does break to the upside? What if we do start to go much, much, much higher? And any number of stocks will help, including some of the FANG stocks, the tech stocks. Facebook turned away from the high, strangely enough. Facebook did make a new high today. Amazon is retracing from the high, as is Netflix. So all this is what's supposed to be happening. If you did decide to short Netflix and get some long premium or long puts in Netflix or some of these other names, we'll sort of end the video by looking at what is supposed to happen in the big picture. It's this right here. When the market goes to the upper edge of the weekly expected move, but also the profile, the odds would favor a movement down to the lower, and maybe even under that. That's your value area extreme. Same thing with the weekly expected move. Netflix, you did it. You did what you're supposed to do. But everything else in the market seems like it's topsy-turvy. But as a trader, that's just how the cookie crumbles sometimes. Be careful, be safe. Obviously, watch the market overnight tonight, Wednesday and Thursday, and take care of your open positions. But be patient. Give the market some room and trust the probabilities. As always, be careful, safe. This is Corey Rosenblum with your Theo Nightly Video for May 26, 2020.